Hello, fellow traders. 'Tis I, the Rumpled One. It's Saturday morning, February the 11th, 2017. I'm working on what I call the Price Travel Analyzer. Back in my TradeStation days, I did something very similar to this, and I'm just wondering. I wonder why I haven't done it before on the MT4 platform. We know price moves, it travels. It'll go up, it'll go down, it'll go up, it'll go down, it'll go up, it'll go down. And it does it over a period of time. And a lot of times, I like to use frequency distributions, but that's based on price going from one point to another and the difference. So for example, we might look at, high minus the close to see how much money we could have made if we had shorted at the high and we rode it to the close. Things like that. But the price analyzer gives you basically the ability to say within a day or an hour, says, okay, if price started here and if price went down here, how many times did price go up here? So let me just show you. This was the old name. Like I said, I had to figure out what to call it. And so now I am calling it the Price Travel Analyzer. And you see here, we're looking at the periods, the current period, and we're going to use just the current period here. And we've got different price levels. As you can see, we've got open, high, mid, low, close, top and bottom, the previous. We've got the pivots. You can put in a fixed price. You can use the current price. You can use the current fib level, or you can use the previous fib level. So, and you get to do that on both sides of the equation. Basically, we have, you can do it 1, 2, or 3 conditions. So, for example, if we say open is greater than the pivot point, okay? And then we can say, did the low go below the S1, and did the close above greater than the pivot point? And you see we get the analyzation, but we're using the H1 time frame, and it really doesn't make sense using pivots on H1. So instead, let's move over to the daily. So you see here for the euro yen, that really didn't happen too much. It went below, but it didn't close below. So okay, so what we can do, we can load up another one. Now we want to load up a second version, so we'll increase the indicator tag so it doesn't overwrite. And since it's using 5 lines and they're about 20 high, we can just move it to 200 and we'll get a second version of the indicator there. So open greater than the pivot, low less than S1. So let's see, did close above S1? Okay, so you see here the first 2 numbers are the same, but now we're saying did close get above the S1? So that's how we're analyzing price. I hope that's clear, the 2 cases we looked at. Now, let me explain about these numbers here, just so there's no confusion. 53%. So 53 out of 100 times, the open was greater than the pivot point. So that's why that's 53. Now, 9 times out of that 53, the low was below S1. So 9 divided by 53 is 16.98. So I just want to make sure people don't say, hey, how come that's 16, it should be 9. No, this is the first filter. And so after we filter that time, then we look to see how many times this occurred. So here, 53 times out of 100, 9 times out of 53, or 16%, but then 4 times out of 53, not 4 out of 9, but 4 out of 53. So you see here, so it's 7% at a time. So you're looking, you go, should I take this? If it goes below S1, should I think about going long? Well, doesn't look like that'd be a good trade. So that's one way of using the analyzer. Now I've got a couple others up here just to show you some of the things that it can do. So here we go, open greater than the previous low, and we're looking at the weekly. So right here, open was greater than the previous low. Low went below it, and then the close was less than the previous low. Okay? So in other words, in this case, if you would have gone short at the previous low, and you just rode the trade 25 times, you would have closed positive. In other words, if you went short. Okay, in this second case where we're saying the first two's the same. Well, actually, no, the first two aren't the same. The first one, we're saying that the open was greater than equal to the previous bottom of the candle. Okay, so in other words, the bottom of this candle would, actually this is a bar chart, but if it was a candle chart, this would be the bottom right here. Okay, so was the open greater than the bottom? Was the low, did it go below the previous low? And did it close below the bottom? So in this case, if you went short at the bottom, it would have closed below the bottom this many times, 17. So once again, you're saying open was greater than the bottom, so then the price dropped down. So it went below it 22 times, and 17 of those times it closed below it. So you see here, there's a high probability of a profit. Now, I've also given the indicator the ability to use a pip offset. So you can see here, open was greater than or equal to the bottom 62 times. Low was less than the previous bottom plus 10, 35 times, plus 50, 34 times. But see, really, that's not what we want. What we really want to look at is, because see, that's bottom plus 50. So I want you to, I did that so you can see, wait a minute, that's not really what you mean. You really want to say minus 50 and, or minus 10 and minus 50. Okay, so here the low was less than the previous bottom minus 10 30 times, and it was less than the previous bottom minus 50 30 times. So in other words, if you went short at the previous bottom, you would have picked up at least 10 pips 30 of those times, and you could have picked up 50 pips 30 of those times. So that's how that works. And I also set it up where we can analyze the fibs. So you have the ability to use the previous fib or yesterday's fib or the current fib or just fib, today's fib. Now, one of the things that I do is the low is always the 0 and the high is always 100. I know there's lots of people who've argued with me over the years, but I'm sticking to my guns. I think of it like a thermometer. The 0 is on the bottom, the 100's on the top, and it's just that simple. So what we're looking at here is, did the open greater than 50% of the previous fib? Okay, which is basically the midpoint of yesterday's range. Okay, then we say, did the low go below the 50% fib, and did the low go below the 38% fib? So once again, for those who like the fib numbers, you can see here it went down 69% of the time that it crossed the 50% fib, went below it, and it actually went below the 38% fib 32 of those times. Now here we're looking at open above the 62% fib 38 times. Did the low go below it? Yes, 26 times, or 68% of the time. If it opened above it, it went below it. And then did it go below the 50 level? Yes, it did, 11 of those times. And finally, did it open above the 50%? Yes, 52 times. Greater than or equal. Was the low less than the 24% fib? Yes, it was, 25 times, or 48% of the time that it crossed that open greater, it went below. And then how about, did it go below the 0? In other words, did it break below that bottom? And yes, it did, 17 or 32% of the times. So once again, that's the price analyzer. I have not sent this out yet. It'll probably go out in batch 2 because I want to do some more testing, and there might be a few more tricks I have up my sleeves. But as you can see here, once again, there's lots of options that you can use. You've got all the pivot levels, fixed price. I guess I should show you one on fixed price. I've got a few minutes here. Fixed price. Okay, where was it? So what we want to do, we want another travel analyzer, 0, 1, 2. So this one would be 3, 100, 200, 300. We'll put this at level 400. And we want to use, let's say, open greater than the fixed price of 113. And so that's what this input is. No, I'm sorry, this one right here. So we go open greater a fixed price of 113. Okay, so out of the last 100 bars, we had 62 times that it opened above 113. And I just left these other two here. Whoops, we don't want that. And so what you can do here is just specify in the for fixed price low, level B, we want none, and level C, we want none, and they go away. So how many times did it open greater than 113? 62 times out of the last 100. So there you have it, fellow traders. But remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off.